well should come up for you on the screen. Copran is the stock we're talking about. And Skipper as well. So some of these underperformers actually are up between 8 to around 10% in today's trading session. Anand Shah, head of PMS and AIF investments at ICICI Pru, joins us on the show. Hi Anand, good afternoon. Thanks so much for joining in. Well, I'm looking at a contra fund and a couple of other funds as well. It seems that on the metal basket, you have quite a bit of exposure. You know, Godavari Power and Ispat, you have Tata Steel, you have Hindalco, so ferrous, non-ferrous as well. Where do you think we are in the cycle? Are these old investments that you have made? I mean, a few months old, older, or are you adding as well at these levels? Because one school of thought is, if China unlocks, then the best way of playing the China theme will be via metals. Your take?
Hi, very good afternoon. Thank you for having me here. Yeah, so we've been owning these names for a while now, and almost 3 years, and we've been still adding for our clients as and when there's an opportunity. The point being, a few things have changed for good, and one of that few things is actually China in terms of the pollution clampdown. Very honestly, it's not only about metals. Many energy intensive or fairly polluting industries in China, there has been a severe clampdown. Their competitiveness in manufacturing these and exporting to the rest of the world has reduced over time. And that's one positive. The other positive within the metals industry is been decarbonizing. So the other inflation that you will see in metal, and you are already seeing inflation in metal prices in per se, that steel has become fairly expensive over the last 3 years, and so much so, even the aluminum. And to that extent, that's a reflection of that the world will decarbonize. The world will have to use the sources other than coal to make these metals. And that will involve not only OPEX, significantly higher OPEX, but also higher CAPEX. And to that extent, what we are seeing, that over a decade, the prices of metals would be higher. At the same time, there are also bottom-up reasons for many of these companies. They made wrong acquisitions, wrong investments a decade back. A lot of course correction has happened. Their balance sheets are improving, the return on equities are improving, and most importantly, the incremental capital allocation, that is something which we have been watching them very closely. That also seems very prudent. So both top-down and the bottom-up reasons to own these names.
Anand, afternoon. What's the top-down call you are taking at ICICI Pru when it comes to the global market? Because it does appear to be turning a little more supportive with, the bond yields where they are, the possibility of rate cuts next year, crude prices easing off from the levels that it was. So what's the top-down macro call, very quickly?
I think macro continues to remain challenging. They have been very challenging for the last 2 years, especially post the Russia-Ukraine fallout. Inflation has gone up, interest rates have been inched up, and the dollar is strengthening. And I don't think that's, so far, it looks like it's topping out. Maybe over the next 12 months, we might have reasons to be happier that, we've seen the peak of interest rates in US, and to that extent, peak of dollar, and then maybe the FI inflows can come back into the country, but there are no early signs yet. I think the US economy remains very, very strong. The fiscal deficit is also fairly wide in US, and that doesn't give you confidence that Fed is done with. And to that extent, this is a era of higher interest rates for longer. The only fear is it should not go further higher. I think that's the only thing we are watching out.
Okay, got that. Anand, hi. Good afternoon. So tell us, what was your big takeaway from the earnings season, Q2 earnings, and were there any positive surprises, anything that forced you to take a fresh look in terms of a theme, sector, certain type of companies perhaps?
I think we've been fairly happy with the results in the sense that we've been holding this view that a trend has changed. For almost a decade since GFC, or maybe 1.5 decades, you were comfortable owning consumer-facing businesses and avoiding all the B2B businesses, manufacturing allied, utilities, or even the lenders to utilities. All those were fairly underperforming or not performing at all. But if you're owning a consumer-facing businesses, you're benefiting from the deflation exported from China, whereas manufacturers suffered. So that's the one view we have been taken last 3 years back, that trend has changed. China, instead of exporting deflation, is going to export inflation, which would be negative to the consumption basket, but positive for the manufacturing basket. So continuing on that, for last 2-3 years, we have seen the profit growth rate in B2B segment is almost twice, thrice better than the consumer segment. We are seeing profit growth in both. So one good news is that India Inc. in general is getting good profit growth rate for last 3 years, which has been driving the markets. But within that, the basket of B2B has been doing much better than expectations versus B2C basket. Q2 has not been very different. Even within banking, if you see, the erstwhile corporate banks have performed much better than the retail banks, and so much so, many of the manufacturing and manufacturing allied businesses continues to do very strongly on top line growth rate. Margins have improved as the commodity price pressures have come off. So that's helping both manufacturing entities as well as to some extent consumer facing businesses.
Okay, all right. Anand, where are you placed on these gold financiers? There was a big market. And out there, in fact, you only had Muthoot and Manappuram that were doing very, very well. You have some exposure in the gold financer space. But, there are other banks, when I speak to CSB, when we speak to a Federal Bank as well, smaller banks out there, they have seen this opportunity, Canara Bank, and they are penetrating into the market. How are you placed in the gold financiers from your knowledge? Do you think they still have scope to improve? Or would you rather play the banks? I ask this because I see in your holding, you have Muthoot Finance.
No, indeed. So the return on equities that this business made was very high for a very long period of time. Banks have sort of ignored a very, very profitable segment because the risk of losses are very little. At the same time, the yields are very higher. So I think this is one segment which was very profitable for these financiers. Now they have kept the ROE very high, which is in turn attracting competition. So you're right that all the banks, by only few select banks, all the banks are looking at least within their own customer segment. If somebody needs a gold loan, they would be more than happy to provide that. And to that extent, there is increased competition, which in turn means that the lower return on equity. But that doesn't take away the attractiveness of the business. I think even at that lower return on equity, it will be still better business. And to that extent, the prospects remains strong. The other thing which is also leading to a lower growth rate in gold loan business is also fairly easy availability of the unsecured personal loans. I think that is something that has changed last week. I think as the risk capital or the risk weight goes up, the unsecured personal loan, I think there should be less supply of that easy money available, and that can also lead to some bit of growth coming back in the business.
Anand, while you don't make many changes on a day-to-day basis, but over the last 3 months, have you made any changes in your portfolio, increased the weightage on any of your holdings, pared it down just to rationalize the holding, any additions, any deletions? 3 months.
I think more recently, if you ask me, we've been always liking manufacturing allied, and one of that allied business is utilities. I think very clearly there is an increased, I would say, awareness that the electricity demand is growing much faster than anticipated, and there is going to be a deficit. That is helping both the utilities as well as the utility financiers. So even somebody who has been expert or specialized in funding of these utility financiers, those are also, they're seeing strong recoveries. First and foremost, all the stranded power plants, there are enough maybe one, two, or maybe 3 bids for many of those. So a lot of your NPAs getting resolved. But at the same time, the demand outlook looks strong, both on the thermal side, but more importantly on the renewable side. And those are also the some areas where we are finding attractive valuations as well as good growth. Those are some of them we have again added in.
And any deletions or changes in weightage?
I think we've been sort of very stable in our portfolio. We haven't found any of our companies where there has been significant disappointment. So to that extent, a large part of the portfolio remains the same for almost last 2 years.
Okay, all right, Anand, we will leave it on that one for today. Thank you very much for joining in and giving us your thoughts on the market. We do have to take a very quick